You're listening to the Financial Source Podcast, your daily dose of sentiment updates in the European and U.S. sessions and critical risk event previews so you stay up to date with what's moving the market right now. Each session is carefully crafted personally by the Financial Source analysts and voiced by our AI hosts who, as it turns out, sound a lot better than we do. Here's Rachel and Michael with this session's deep dive.
Welcome to another deep dive. It's Monday, September 15th, and the global stage is certainly buzzing with activity.
It really is. We've got a stack of sources here, articles, research, our notes.
Covering everything, yeah. Currencies, commodities, trade, and those ever-present geopolitical flashpoints.
Definitely. And our mission today, really, is to cut through all that noise.
Distill the most important nuggets and give you a real shortcut to being, truly well-informed about what's shaping our world.
Exactly. Helping you connect the dots.
Okay, let's unpack this.
Sounds good.
We're going to explore really a fascinating snapshot of how things like central bank caution, intense trade negotiations, some surprising geopolitical developments, and even, very specific local policy changes.
Yeah, all those little pieces.
They're all interconnected and actively shaping global markets right now.
You should get ready for some aha moments because the connections, they can often be quite surprising.
Okay, kicking things off then. Foreign exchange markets. They're starting the week relatively steady almost.
Holding their breath.
Holding their breath, exactly. For those crucial midweek central bank announcements.
Yeah, everyone's waiting on those.
But beneath that calm surface, I'm seeing some really interesting currents at play. Let's start in Europe.
Okay, Europe. A key dynamic we're watching there is the European central banks, the ECB's cautious stance.
Cautious now.
Well, policymakers are strongly signaling that their rate-cutting cycle is either over or, very close to it.
Really?
Yeah, they're even warning that further reductions could genuinely threaten price stability. That's a critical metric for them.
Right, their mandate.
Exactly. So this subtle but firm tone, even as the broader dollar softens a bit globally, it's quietly undertuning the euro. It's a signal, really, that they're prioritizing stability over more easing.
Which is a crucial read for the market, yeah.
Yeah.
So the ECB is essentially saying, hold on, we've done enough for now.
That seems to be the message.
That's powerful. But okay, from Europe, let's jump across the channel to sterling. The UK currency is also finding some footing.
It is, yeah.
What exactly is supporting it right now?
Well, sterling is actually seeing some good support from very specific domestic policy headlines.
Oh, yeah.
There are plans under discussion to scrap VAT, that's value-added tax on energy bills.
Ah, okay. That'd be noticeable.
It would for consumers and businesses. And we're also seeing a run of inward investment announcements.
Linked to the U.S. state visit I saw.
Exactly. These aren't just whispers. These are concrete, immediate drivers that, help stabilize the currency.
Boost confidence, signals some economic relief, maybe.
Precisely.
Okay, so those are tangible domestic drivers. But while Europe and the UK navigate policy shifts, let's turn our gaze to Asia.
Right.
The dollar-yen pair is looking a bit softer today. Tokyo's closed, yes, but Japan's political calendar is stirring up some real uncertainty too, isn't it?
It absolutely is. We're closely watching Chief Cabinet Secretary Hayashi. He's expected to declare for the ruling LDP leadership contest.
The Liberal Democratic Party, right?
Yeah.
The main player.
That's the one. And polling continues to rate Takaichi, who's seen as a more conservative voice, quite highly.
And this isn't just, dry politics for the markets.
Not at all. Leadership contests like these, they create policy uncertainty, and that directly impacts market sentiment and, the yen's value.
Makes sense. And then shifting focus, China.
Yeah, China. A fascinating move from their central bank, the People's Bank of China. Deliberately set the yuan's daily reference rate, the fixing, stronger against the dollar than market expectations. Much stronger, actually.
That is a strong signal. So despite some, pretty underwhelming domestic data we've been seeing from China.
Right. The data hasn't been great.
The PBoC is actively pushing back against market expectations. Is that sustainable, though? without bigger stimulus?
Well, that's the million-dollar question, isn't it?
Yeah.
I mean, this isn't just a technical number. It's a strategic move by Beijing. They're projecting confidence, maybe trying to deter speculation against the yuan.
So signaling stability is the priority.
It seems so. It signals that despite those domestic economic wobbles, they prioritize financial stability, and they're willing to intervene, aggressively even.
Okay. So for you listening, this means China's central bank isn't just reacting, it's actively shaping the game.
Exactly. A critical read for anyone watching Asian markets. But, you know, it's long-term sustainability without fundamental economic improvement. That's still the challenge.
Right. Markets will want more than just currency tweaks eventually.
They always do.
And that focus on stability, it resonates elsewhere too. South Korea, for instance, they're in talks with the U.S.
Right, I saw that, about minimizing FX market spillover.
Exactly, from a U.S. investment package. They're even keeping the possibility of direct swap lines on the table.
Which is significant, shows the level of concern.
And Canada also enters the FX narrative this week.
Indeed. The Canadian Prime Minister flagged a, quote, substantial deficit, linked partly to tariff impacts.
Tariffs again.
Yeah. While at the same time, launching a pretty significant CAD 13 billion housing agency.
That's a complex fiscal picture.
It is. Markets are weighing that alongside upcoming data and policy guidance. So what we're seeing across the board is currencies reacting not just to the big central bank picture, but also to very specific national policy decisions, political moves.
It's a very granular game right now.
Exactly.
Yeah.
Each national story feeds into the global FX picture.
Okay, now, if currencies are the pulse, then commodities are maybe the raw nerves of the global economy.
Good analogy.
Yeah.
Yeah, they often react instantly to shocks and demand shifts.
And today, those nerves are definitely firing up. Crude oil, for instance, is starting with a bid,
It is.
which feels a bit counterintuitive maybe given some global growth concerns. Is this purely geopolitical?
It's largely geopolitical right now, yes. That bid in crude benchmarks is certainly helped by a softer dollar,
Okay.
but also by sharpened U.S. rhetoric toward Russia.
The sanctions talk.
Exactly. The U.S. president stating he's ready to impose major sanctions once allies align and NATO nations stop buying Russian oil. That keeps significant policy risk embedded right in the energy markets.
It's a clear signal this isn't going away. You can see it influencing prices.
Definitely. Traders have to factor in potential supply disruptions.
But it's not just geopolitics, right?
Yeah.
Supply-side shifts are always in motion. We have a few developments there.
Absolutely. Things that could impact the medium to long term.
Like what?
Well, we're seeing Iraq signing a joint operations agreement with Total Energies and Qatar Energy, LNG. That's significant for boosting capacity.
Okay.
Egypt approved 3 new exploration deals. Over $121 million worth across different regions, pushing for new reserves. And quite significantly, Ecuador announced the withdrawal of its diesel subsidy, redirecting funds to social programs.
That's a big policy shift.
It is. And each of these, in its own way, it nudges the medium-term balance. Regional pricing affects everything from your gas pump to industrial costs down the line.
Right, by altering supply and government finances.
Okay.
But what about gold? The safe haven started with an upward bias today.
It did.
Was that initial rise pure geopolitical fear or more complex?
That initial rise was certainly driven by that geopolitical focus, yes. But it eased back a bit during the day.
Still sensitive to the central banks.
Very much so. It remains quite sensitive to this week's signals again, showing that fundamental interconnectedness. Currencies, rates, commodities.
It's never just one thing.
Rarely. Now, looking at base metals, they're kind of capped by the softer Chinese activity. That's a recurring theme.
We'll come back to that.
But copper is notably holding above the $10,000 per ton mark.
Which is interesting, right? Given the demand signals.
It highlights a fascinating tension. You've got traders balancing weak demand indicators against, well, strong supply narratives.
Especially around the green energy transition.
Exactly. That narrative is keeping the price supported despite other headwinds.
And what about some more localized but still potentially impactful commodity news?
Well, a couple of things. France faces potential power sector disruption. There's a strike notice for midweek. Could impact energy supply locally. Indonesia also signaled an intention to lift its stake in Freeport Indonesia, the big mining operation, by more than 10%.
Resource nationalism again.
It's a powerful reminder of those evolving currents, yes.
Yeah.
Countries wanting more control over their valuable resources.
Well, seeing that trend globally.
We are. And one more, Thailand is reportedly weighing a tax on gold trades specifically to cool a stronger baht.
Ah, so a direct feedback loop between FX policy and commodity flows.
Exactly. One action directly influencing the other in maybe unexpected ways.
Okay, fascinating. Moving from the physical realm of commodities to the, well, often intangible but deeply impactful world of tariffs and trade.
Right. Always complex.
Day 2 of U.S.-China talks underway in Madrid. What's the feeling there? Any perceived barriers? Are we inching towards breakthroughs?
The weekend reports suggested pretty limited progress on the key issues. Tariffs, fentanyl.
Not surprising, maybe?
Perhaps not. This is reducing the odds of a high-profile Beijing summit, making a lower-profile leaders meeting, maybe around the APEC forum.
In South Korea next month.
More likely. Yeah, in South Korea. The U.S. Treasury did say some technical progress has been made.
Okay, some.
But significantly, they also noted that the Chinese counterparts arrived with an, quote, aggressive ask.
That speaks volumes about the difficulty, doesn't it?
It really does, about the tenor of the negotiations.
And TikTok. That remains a significant lever, especially with its current operating extension expiring September 17th.
Yeah, that deadline is looming.
I'm sensing this isn't just about business anymore. It's firmly in the national security arena now.
Oh, absolutely. And here's where it gets really interesting.
Go on.
Senior officials suggested another extension could be announced, but the White House is very firm, insisting national security concerns will not be sacrificed.
That's often the unmovable line, isn't it? National security.
It is, and it shows the high stakes involved in, digital sovereignty, data security.
So for you listening, the future of major tech platforms is increasingly tied to geopolitics, not just market forces.
That's a key takeaway.
But it's not just the U.S. making moves. Beijing's launched some counteractions, too.
Absolutely. It's reciprocal. Beijing opened an anti-dumping probe into certain U.S. analog chips.
Okay.
And launched an anti-discrimination investigation into U.S. measures that specifically target China's integrated circuit sector, microchips.
Right. Underscores how technology is it's firmly at the heart of the friction now, beyond traditional goods.
It's the strategic battleground, the components of the digital economy.
And the U.S. also recently expanded its restricted trade list, and not just China this time.
That's right. Washington added 32 entities to the list on Friday. 23 were from China, yes. But additions also spanned India, Iran, Turkey, and the UAE.
So what did that broadened scope signal?
It signals a broader scope of concern for the U.S., clearly. Not singularly focused on China, it hints at a wider strategy, maybe, to control sensitive tech and goods.
Interesting. And beyond the U.S.-China corridor, other trade talks happening?
Yeah, things move elsewhere, too. India and the European Union have scheduled their next trade round for October 6-10 in Brussels.
So other global trade dynamics are still very much at play.
Constantly evolving.
Okay. Few things move markets like geopolitics, and today's tape is, well, it's busy on multiple fronts.
It really feels like the world map is just dotted with these flashpoints right now.
Each with its own fuse, yeah. Let's start with the Russia-Ukraine war. The rhetoric seems to be escalating there.
It does. The Kremlin has declared that NATO is, quote, de facto involved in the conflict.
Strong words.
Very. And senior Russian officials warned that allowing NATO countries to shoot down Russian drones over Ukraine would mean war with the alliance.
Wow. Those are very serious escalatory warnings. Heightens global risk perception immediately.
Instantly. And in response, the G7 finance ministers, they discussed accelerating work to channel those immobilized Russian sovereign assets to Ukraine.
Right, using frozen assets.
And flagged further sanctions, trade measures, maybe including tariffs, which could further impact global financial flows.
And on the ground,
Ukraine said it thwarted a Russian offensive in the Sumy area, claimed a strike on Russia's Kyryshi refinery.
And neighbors are getting drawn in, peripherally.
Yeah, Poland and Romania reported scrambling aircraft in response to drone threats near their airspace. Shows those immediate regional impacts heightened alert levels.
Okay. Now, tensions also rose in the Middle East after an Israeli strike in Qatar.
Yes, that caused ripples.
What are the diplomatic ramifications there?
Well, it prompted Doha to warn it undermines de-escalation efforts, even as they pledged to continue mediation with Egypt and the U.S.
So trying to keep talks alive despite the incident.
Seems so. But Hamas, for its part, said it suspended prisoner swap talks, which further complicates an already delicate situation.
And adding to regional concern?
Yeah.
Iran.
Iran warned that EU moves towards snapping back UN sanctions, basically, reimposing previously lifted international sanctions.
Right.
Could jeopardize nuclear monitoring efforts. So the region truly remains a volatile mix. Diplomatic, military challenges all tangled up.
Yeah, deeply complex. Okay, shifting focus across the globe. Indo-Pacific, we continue to see significant maneuvering there.
We do. The United States, Japan, and the Philippines held joint maritime exercises in the South China Sea,
Sending a signal.
while China conducted its own routine patrols and, significantly, told Manila to stop provocations.
So it keeps maritime risk elevated.
Definitely. Continued maneuvering for influence in a critical global waterway, a key artery for global trade.
Any disruption there has immense global ripple effects.
Absolutely.
And we also have other, maybe smaller global points bubbling.
A couple, yeah. Pakistan reported a positive call between its deputy prime minister and the U.S. Secretary of State on bilateral ties.
Okay.
And Venezuela protested a U.S. Navy interception of a Venezuelan tuna vessel inside its exclusive economic zone, arguing it endangers Caribbean security.
So what's clear from all this?
Is that these aren't isolated incidents, right? They all contribute to this complex, interconnected global risk landscape.
And that directly influences economic decisions, market movements.
Everything from energy prices to investment flows. It's a constant balancing act for leaders and for markets.
Okay, let's bring it back maybe to some policy and economic signals impacting markets, starting again with Europe.
Right?
We've got some ratings changes impacting sovereign debt. Those can have real consequences.
They really can. Fitch downgraded France's sovereign rating to A+ from AA, though with a stable outlook.
A downgrade for France.
But on the flip side, Portugal and Spain were actually upgraded by major agencies.
Interesting divergence there.
It is.
Yeah.
And these seemingly small shifts in credit ratings, they can have big implications for a country's borrowing costs, investor confidence.
Definitely. And politically in Europe.
Yeah.
Germany.
Yeah, in Germany's bellwether state of North Rhine-Westphalia, exit polls showed the CDU, the main center-right party, leading.
Okay.
But notably, support for the AfD, the far-right party, tripled.
Tripled. Wow. That's a significant political retilt.
It is. Investors will watch that closely for implications at the federal level. Could influence future economic policy for the whole bloc, potentially?
Right. But on a more positive note, maybe for Europe, the UK announced some significant inward investment news.
They did. That ties back to what we said about sterling earlier.
Ah, yes.
The UK announced over GBP 1.25 billion of inward investment from U.S. finance firms, supposedly 1,800 jobs attached,
You'll take me numbers.
and detailed more than GBP 1.1 billion in joint government industry funding for the maritime sector, all timed ahead of the U.S. state visit.
So concrete boost to the economy, showing confidence, creating jobs, especially important as the UK navigates, post-Brexit.
Exactly. Real money, real jobs.
Okay, finally, let's look at the China macro backdrop. You mentioned it as a headwind.
Yes, a significant global headwind right now for risk-sensitive FX industrial commodities.
So what's the latest data telling us? Why the concern?
Well, the recent data, it paints a picture of ongoing challenges, frankly. August industrial output grew 5.2% year-on-year.
Which sounds okay,
But it was versus 5.7% expected. Retail sales rose 3.4% versus 3.9% forecast.
so misses across the board.
Pretty much. Fixed asset investment slowed way down to just 0.5% year-to-date. The urban unemployment rate edged up slightly to 5.3%.
And property. Still weak?
Yeah, home prices fell again on both monthly and annual basis. So essentially, key economic indicators are underperforming expectations, signals softening domestic demand.
And the authorities' response. Just pledges so far.
Well, they have pledged to expand domestic demand, to stabilize employment, add property support.
Usual promises.
There are some specific targets, too. The industry ministry targets roughly 3% growth in vehicle sales this year. Hong Kong is talking to Chinese EV makers about local manufacturing.
Okay, some movement?
But markets are clearly looking for concrete stimulus, something big enough to actually move the needle rather than just pledges.
Right, that ongoing uncertainty in China has those global reverberations.
Yeah.
Affects commodity demand, overall market sentiment.
Everything. That's why it's such a critical headwind to watch.
Wow. What an incredible journey, really, through the global markets today.
It covers a lot of ground, doesn't it?
It really does. We've seen how central bank nuances, those intricate tech trade disputes, vital commodity supply shifts, geopolitical tensions from, Ukraine to the South China Sea.
We're all intertwined.
Every piece of information we've unpacked today, it isn't happening in isolation, is it? It's part of this grander, ever-shifting puzzle.
Absolutely.
So what does this all mean?
Well, if we connect this to the bigger picture for you listening, It means that even seemingly small things, like a regional political shift or one trade negotiation,
Yeah.
can create ripple effects. They influence global currency values, commodity prices, broader economic sentiment for everyone.
It really drives home the interconnectedness.
It does, and maybe it raises an important question for you to consider going forward.
Okay.
As global players navigate these complex interdependencies, how will these increasing trends, resource nationalism, technological competition, how will they reshape the fundamental supply chains and trade agreements that underpin your daily life in the years to come?
That is something to really think about, how the foundations might be shifting.
Exactly.
Well, we hope this deep dive has given you, our listener, a clearer lens through which to view our dynamic world.
Hope it's been useful.
Until next time, keep exploring, keep questioning, and keep getting informed.
Thanks for listening to the Financial Source podcast. If this podcast helped you at all today, would you consider leaving us a review to help spread the word? Each month, we also give away different resources and indicators just to podcast listeners. So write into Financial Source at support@financialsource.co to claim your free gift today. Talk to you all in the next episode.